Hello friends, I'm Darpan Mehta. I'm here to talk briefly about the new country-by-country reporting requirements or CBCR, which is Action 13 of the OECD BEPS project, released on October 5th.
Hello, and I'm Nikhil Bhatia. We are also going to speak a bit about place of effective management or the POEM concept introduced in the domestic tax law in 2015 and how that links with the new documentation requirements under the CBCR or BEPS regulations.
Let's start with CBCR and the new documentation requirements. Essentially, taxpayers will need to maintain three-layered transfer pricing documentation, which comprises a master file, a local file, and a CBCR template. The master file will give a global overview of the group and its transfer pricing policies. The local file will provide information about the respective local entity, its related transactions, and the detailed transfer pricing analysis. The CBCR template, which is the most significant change, will essentially capture data on revenues, profits, taxes, number of employees, and the nature of business activity for each and every entity in the taxpayers group. The master file and the local file essentially replace the existing OECD guidance on transfer pricing documentation, and the emphasis is on explaining value drivers and significant people functions. As regards the CBCR, with a view to balance the compliance burden, the OECD has essentially recommended that MNCs with consolidated annual turnover less than Euro 750 million, which is approximately INR 5,000 crores, may be exempted from this requirement. The important question now is, what does this seek to achieve? Broadly aligned with the overall objective of BEPS, which is to create transparency, CBCR essentially aims to create transparency of a baseline level of global information in a consistent way to all tax authorities. The expectation is that such transparency will help identify whether companies have artificially shifted income to low tax jurisdictions as against jurisdictions where the value was actually created. The tax authorities are meant to use this reporting as a tool to assess transfer pricing risks and determine areas for further transfer pricing audits. These new requirements are likely to be incorporated in the domestic tax law in 2016.
Now let's understand how this links to the issue of POEM. POEM essentially refers to the country from where a legal entity is substantially controlled and managed, or as I like to say, who really calls the shots. For example, a foreign subsidiary of an Indian parent managed and controlled from India will be a tax resident of India and will be liable to Indian taxes on its own worldwide income. Further, such entities, even if loss-making, need to address onerous tax compliance obligations under the Indian tax laws. The global and the local overview in new documentation requirement, including data on employee in each country, will also highlight how the business of a particular entity is being controlled and managed, and consequently its possible exposure to POEM and the Indian tax residency. Hence, the facts and documentation need to be completely aligned to demonstrate where a company is controlled and managed from.
I think it's important to now ask what lies ahead. Firstly, taxpayers need to develop a clear understanding of the new documentation requirements. Secondly, taxpayers need to review existing transfer pricing policies, essentially for global consistency. And the most important aspect here is the ability to identify and articulate the company's value drivers and how each group company, including those in the low tax jurisdictions, are contributing to such value through their own functions, assets, and risks, and significant people who support those functions. All of this needs to be documented and demonstrated. Nikhil already spoke about linking this with POEM and consequently examining the tax residency of the foreign affiliates. I think I would also like to add that the adequacy of financial reporting systems is critical. CBCR requires consistent information of several affiliates across geographies, reporting systems, and different tax jurisdictions. The reporting systems will accordingly need to be robust and provide timely, consistent, and accurate data.
To summarize, BEPS is the most significant change to the international tax rules in almost a century. CBCR will lead to an unprecedented level of global reporting, including data on employees. Early efforts by taxpayers to test BEPS readiness will highlight areas which may need to be addressed upfront. This will help Indian MNCs comply confidently once the BEPS requirements are formalized in the domestic tax law.
Clearly, while there's lots to do on this front, we do hope that you found this interesting and useful. Thank you very much for your attention.
Thank you.